Friends, let me talk to you now about the Government of India budgeting procedures. And before that, let's also try to know what is the general concept of budget, what are the forecasts and budget, what is the difference, the purposes of budget, similarly, the essentials of budget, that is, the support that is required from the government or from the organization if the budget is to be a success. And then we will try to know the details of Government of India budgeting, the budgeting exercise that is followed by Government of India. See, in any organization, so whether it is government department or a private organization, the management implies the coordination and the control of activities of the organization. And budgeting, which is also called as the profit planning, especially known as the profit planning in the private organization, it's an integral part of the management. And the head of the finance, whether you call him as the director of finance or finance controller or the finance officer, he is naturally interested in profit planning. And this budgeting exercise, it definitely helps to regulate the flow of funds. And the budget, as we are all aware, it is defined as a comprehensive and coordinated plan of action that is expressed in financial terms. See, this budget is a plan for the firm's operation and resources. It involves control, it involves manipulation of relevant variables, etc. And budget is also a mechanism to plan all activities with a common denominator, namely the finance or the money. Let's see now what is the difference between the forecast and the budget. See, forecast is a statement of facts likely to occur. So it is the statement of probable events, whereas budget is a statement of planned events. Forecast is an event over which no control can be exercised, whereas budget it connotes a sense of control. So budget begins after the forecast ends. So forecast is a pre-exercise for the budget. So several alternative choices are made in the forecast, whereas the decision to go ahead with the best alternative is the budget. And then what are the purposes of budget in general? See, budget states the firm's or say the office or department's expectations in very clear terms. So what are the objectives? What are the objectives to be achieved during a given period of time? What is the money available and what are the responsibilities of each department or authority? So it's all very clear in the budget, and it also communicates the expectations to all concerned people and the authorities in the government. And the purpose of budget is to provide a detailed plan of action for reducing the uncertainty. Also, the purpose of budget is to coordinate the activities and efforts available in various departments, the men, material, resources. It may be production department, the finance, the admin, the HR, the marketing department. So we have to coordinate the activities and the efforts and maximize the use of resources. So this is possible only when there is a budget. And the budget also, the very purpose of budget is to provide a means of measuring and controlling the performance of individuals and the individual units. So budget therefore naturally it involves planning, coordination and control before it is prepared. So planning reduces uncertainty and provides a direction. Coordination strikes a proper balance between the labor, material, and resources to achieve the goals at minimum cost. So the budget very clearly indicates the responsibilities of the individuals and the individual units or the departments. So how many people you have to recruit? as a HR or administration. How many buildings the Civil Works Department has to construct during the year or the given period of time. Similarly, what is the material to be procured, the assets to be procured by the commercial department or the stores department. So it's all very clear based on the budget provisions made in the budget. So this is definitely an index. Budget is definitely an index for measuring the performance of various departments, and therefore budget acts as a control device. So now let us come to the budget of the central government. The general budget of the central government, that is other than railways, it is presented on the first day of February. Earlier it was last day of February, but now it is on the date of February preceding the budget year. February preceding the budget year. And along with this budget, the connected demands for grants, they are also laid before the Lok Sabha simultaneously. Railways department, they have a separate budget because they also, present it 1 week before the general budget along with the demands for grants. And all this at the end, after it is approved, the total receipts and expenditure of the railways, they are also, however, incorporated in the general budget of the central government. See, budget, it is intimately related to the accounts. Budget heads and the accounting heads. So they must correspond to each other. Both have to speak the same language. Otherwise, decision making will become very difficult, and it will also not be possible to ascertain the extent to which the parliamentary sanctions have actually been observed. So therefore, the budget estimates are prepared under the accounting heads, the accounting major heads, major, minor, detailed, and activity heads of account. And there are four principal documents constituting this budget. Budget means it's not merely the financial statement, but the other statements that form part of the budget are: number one, the annual financial statement, and number two, the demands for grants, that is, the request for approving the amounts projected in the annual financial statement. Then number three, the appropriation bill. So this bill is to be passed by the parliament to grant the authority to the executive to spend the money. And number four, the finance bill. So it's only after the appropriation bill is passed by both the houses and has received the assent of the president, the executive gets the powers, derives the authority or powers to spend the money from the consolidated fund in terms of Article 266 of the Constitution. So appropriation bill, it pertains to the Consolidated Fund of India. And similarly, the levy of new taxes, modification of the existing tax structure, or continuance of the existing tax structure. So these are all submitted to the parliament through the finance bill. So these things form part of the finance bill. And the statement of estimated receipts and the expenditure of the government of India, it has to be placed before the parliament in respect of every financial year, which runs from 1st April to 31st March. And this is the main budget document. So this is generally referred to as the budget statement. And this budget is always prepared under three broad headings, three parts, namely the Consolidated Fund of India, Contingency Fund of India, and the public account. So budget, or say your financial statement, it is prepared under three major headings separately. So all that pertains to Consolidated Fund, Contingency Fund, Public Fund, separately it is presented, both the expenditure and the receipts part. So all revenues received by the government, the loans raised by government, and also its receipts from the recoveries of loans granted by it from the Consolidated Fund, and all expenditure of the government, It is all incurred from the consolidated fund. In other words, all receipts of the government and all expenditure of the government, it pertains to the consolidated fund of India. And there are occasions where government may have to meet urgent unforeseen expenditure pending authorization from the parliament. You would not have provided for these unforeseen occasions or expenditure in our consolidated fund. So therefore, there is what is called as the contingency fund. It is an interest placed at the disposal of the president to incur such expenditure. So parliamentary approval for such expenditure and for withdrawal of an equivalent amount from the consolidated fund, it is subsequently obtained and the amount spent from the contingency fund, it is again recovered to the fund. So after taking the approval of the parliament, say within 6 months after the event is over. So such expenditures, such amounts and such events, they are all separately dealt in detail under the heading the Contingency Fund of India. And the government also, it acts in certain cases only as a banker. For example, the transactions relating to the provident fund of the employees. It may be contributory provident fund, the employees provident fund, or it may be small savings collection, other deposits of the public. So the monies thus received, they are kept in what is called as the public account. So the public account funds, they do not belong to the government. They are only the custodians, and they have to be paid back sometime or the other to the persons and authorities who deposit them. And parliamentary authorization is not required for payment of these amounts to the public from the public account. I mean, to the public to whom it pertains. So a separate account of such things which the government collects and which is available with the government is dealt in the public account. But in certain cases, for the general services, money can also be diverted from the public account by the government for certain general services. But in such a case, the parliament's approval is required, and later it will have to be recouped. And whenever public, I mean, the owners of these accounts or the monies, when they want it, has to be paid to them without any delay, along with whatever interest that has been agreed upon by the government. And see, certain items of expenditure like the emoluments of the president, the salaries and allowances of the chairman and deputy chairman of the Raj Sabha, the salaries, allowances, and the pensions of the judges of the Supreme Court, and similarly the CNDG of India, the interest on the repayment, the interest and repayment of loans raised by the government, and payments made to satisfy the decrees of courts, etc., etc. These are not obligatory, but these are mandatorily to be paid, and it has been provided for in the parliament. And this expenditure is shown separately as charged expenditure. This expenditure need not be voted by the parliament. No approval of parliament is required to meet this expenditure. So this charged expenditure, I mean department wise, activity head wise, it is shown separately in the budget. So budget has to distinguish the expenditure again on the revenue account from other expenditure. The government budget, therefore, again it comprises of two major parts, namely the revenue budget and the capital budget. So under every head of account, there may be similar heads, overlapping heads, but still it will have to be presented in two parts, the revenue budget and the capital budget. Revenue budget, it consists of the revenue receipts of the government, that is the tax revenues and other revenues, and similarly the expenditure met from these revenues. See, the other receipts of the government mainly consists of the interest and the dividend on the investments made by the government, the fee and other receipts for the services rendered by the government, the revenue expenditure, again it is for the normal running of the government departments and various services, the interest charges on the debt incurred by government. So broadly speaking, the expenditure which does not result in the creation of assets, it is treated as revenue expenditure. Similarly, all grants given by the government to the state governments and other, the financial institutions or parties, it's also treated as revenue expenditure. So all receipts, the tax revenues and other revenue. Similarly, all revenue expenditure, whatever I said now, so all this constitutes what is called the revenue budget. And coming to capital budget, the main items of capital receipts. First, let us come to the capital receipts, then capital expenditure. The capital receipts, they are the loans raised by the government from public, which are called as the market loans. Similarly, the borrowing by government from the Reserve Bank of India and other parties through sale of treasury bills, the loans received from the foreign governments. So these are all the capital receipts. The capital payments, it consists of capital expenditure on the acquisition of mainly the assets like your land, building, machinery, the equipment, also the investments in the shares made by the government. It's also capital expenditure. And the loans and advances granted by central government to the state government, it's a capital expenditure. Monies given to the government companies, corporations, and other parties. So, capital budget also incorporates the transactions in the public account. So, all this capital receipts and the capital expenditure, it is reflected in part 2 of the budget, namely the capital budget. See, where a ministry or department is in charge of a number of distinct services, a separate demand for each of the major services is presented. So each demand normally includes the total provisions required for a service, that is provision on account of revenue expenditure, capital expenditure, grants to states and union territories, loans and advances relating to the service. So department wise it is prepared, both capital and the revenue. And here also again what is voted expenditure and what is charged expenditure, a separate bifurcation is shown department wise, capital, revenue, voted and charged. And normally the provision for expenditure by a particular ministry or department, it finds a place in the demands of that department alone. That's what I said. But however, there are certain exceptions. For example, the loans to the government servants, interest payments, pension, etc., in which, for the sake of flexibility and for the central control, a composite demand for each such item, it is included in the demands, so the common requirements. So it is included in the demands of the Ministry of Finance as recommended by the estimates committee. The estimates of expenditure included in the budget statement, they are for the net expenditure. So the estimates of expenditure included in the budget statement is for the net amount, net expenditure after adjusting the likely recoveries or income. As will be, as is reflected in the accounts after taking into account the recoveries. So the estimates of expenditure included in the demands for the grants, however, they are for the gross amount. Estimates of expenditure included in demands, it is for gross amount. Estimates of expenditure included in the budget estimate, it is for the net expenditure. So each demand, it first gives the totals of the voted and charged expenditure, as also the revenue and capital expenditure included in the demand separately, and also the grand total of the amount of expenditure, for which the demand is presented. The breakup of expenditure on each program, each organization between plan and non-plan is also given in the budget estimates. The aggregate amounts of the recoveries taken in reduction of expenditure in the accounts are also shown in the footnote. The demands for the grants that it incorporates, notes on the demands which give in brief the objectives of the ministry, the department, wherever possible, the targets and the achievements in regard to the major programs. They are also given in these notes apart from the financial information. So normally, the process of detailed consideration of the demands for grants, it is completed only by the first week of May. So to enable the government to carry on its normal activities from 1st April till such a time the appropriation bill is enacted, a vote on account is obtained from the parliament through an appropriation vote on account bill. One is appropriation bill, that is the approval for the seeking approval for the entire budget. Appropriation vote on account bill is the bill for which the approval in advance is taken for meeting the expenditure for the months, at least for the months April and May, till the appropriation bill is passed final. See, the revenue receipts, they comprise of the revenue and the non-tax revenue. Estimates of the revenue, they are received from the tax administering authorities like your CBDT, CBEC. So the estimates in respect of non-tax revenues like interest on loans by government, the license fee in respect of government buildings, payments for the services rendered to other governments. So by the government, the controllers of the accounts accredited to a particular ministry or department. So they have to, prepare and provide all this information as far as the non-tax revenue is concerned. Whereas tax revenue, the CBDT and CBEC, of course, always in consultation with the Ministry of Finance, provide the information to the budget department. So as regards the non-plan expenditure, again plan and non-plan expenditure. So non-plan, so it is all your usual expenditure, like your pay and allowances, the maintenance of the building, maintenance of your equipment, maintenance of the vehicles, the fuel required for the vehicles. So all usual revenue expenditure. And whatever it is, does not require any specific plan. What is usually required for running the government. So this non-plan expenditure, the estimates are finalized by the financial advisors of the concerned ministry with the approval of the Secretary Expenditure. And the estimates in respect of national savings, for example, they are drawn up by the budget division itself in consultation with the National Savings Commissioner. The estimates in respect of the public accounts, they are generally framed by the chief controllers or say the controllers of account and forwarded to the budget division where they are adopted with whatever modifications that are considered necessary. So after the departmentalization of accounts of the central government, right from 1976 onwards, greater responsibility has devolved on the chief controllers or the controllers of accounts in the matter of formulation of budget estimates. So the timely availability of the figures of expenditure, particularly on the important schemes and projects, the the provision is to be provided, the figures and data is to be provided to the management by these controllers, which is required for decision making by the administrative authorities and also for taking corrective action wherever necessary, supposing it is not moving in the right direction. So thank you very much, friends. Thank you very much.